Hey, thank you for being here. Welcome to the show. This is
Credit is Life.
And we hope that you have a great show. Excuse me. I'm going to give you a great show. Excited to have you here. A little too excited because I'm mincing my words a little, but I do want to let you know right now, we would hope that you can please
like the video, leave a comment, and subscribe.
Because this is going to be important for you for the ability to have a relationship with us so you can ask us questions. These are going to be really impactful questions. I'm plugged in with a lot of real estate operatives right now, and it's really helping me out. It's going to make some big moves in my life in the near future, and I would hope that that would do the same for you. So we're going to talk today about conventional, excuse me, I'm all tongue twisted today. So hopefully that doesn't throw you off.
Don't fall for that.
We got the sandboard going. The sandboard should be pretty fun, a lot of engagement. So hopefully that you have a good time as we look for
great financial solution.
And my goal here is to encourage you to
do it.
So I will be peer pressuring you to do the best of your abilities to find ways to make money. So without further ado, let's go ahead and dip in. I got some slides that I prepared for you. Let's talk about this. Conventional home loans. Let's go ahead and take a look. So conventional home loans are a great option for people who have great credit. So if you don't have such great credit, you're going to probably go with FHA, which we talked about in the previous video. So if you haven't had a chance, check out the previous video. But FHA is going to be a great opportunity for you to jump into a home loan. But if you have a little bit better credit, then conventional loans are going to be pretty great for you. Having a decent down payment, and you'll be able to afford monthly mortgage payments is a great option for you. So conventional loans aren't bad at all. In fact, they're great. However, it's important to understand your options and determine if you qualify before committing to one. Not everyone could qualify for a conventional loan, so you want to understand and listen to this part. A mortgage broker will help you choose the right loan option for your needs. Okay? So ideally, you want to take a look at conventional loans, particularly if you have good credit and you can afford the payments and you can drop a little bit more in the down payment. Conventional loans would be a great option for you in those situations. So that would be my recommendation for you to look in, and then you can
do it.
Yeah, you're going to want to hopefully pull the trigger on great conventional loans if that happens. And again, we are all about credit because this is
Credit is Life.
So we want to make sure that we considerably tell you that you want to make sure your credit's in check. And we're going to have more videos on credit in the nearby future. Let's move on to the next slide. Conventional loans have stringent eligibility requirements, but can be very beneficial if you meet the criteria. If you're unsure about your eligibility, this is where you're going to want to consult and meet with a loan expert, such as here we talk about Golden Oak Lending. They can explain the application process and ensure that you qualify. This will save you time, effort, and money. And I want to go a little bit deeper than that. I would also recommend that you look for someone that's a local operative in your town. They can give you great feedback and help with some of these situations when it comes to conventional loans. They can be a little tricky, but if you get surrounded by the right people who know what they're doing, they can definitely help you out. And that's why I'm going to continue to say,
like the video, leave a comment, and subscribe.
Because we also have a great database of information and people that can help you out potentially if you get in touch with us. So hopefully, if you get in touch with us, we can hopefully get back to you and let you know some of the options out there. We have some experts that are waiting and are capable. So that way we can help you out. If that's not something that you want to do, understandable, I would suggest looking for someone in your local area because they're going to have some good information for you, ideally, and be able to help you further with the situation. Let's go ahead and move on to the next slide. All right, and I want to take a look at this picture right here. It's a pretty cool picture. I like how it has the money around the house in the yellow. We got, when I was designing these pictures, I had a little bit of fun. All right, back to the video. A conventional home loan is best suited for people with stable income and good credit. The requirements for conventional loans are based on your debt to income ratio, credit score, and income. So you want to keep an eye on that. Having a PhD myself, that kind of puts my debt a little higher than probably the average Joe because my loans I did have to take out a little bit more than I wanted to at the final stages, but that's okay. The debt to income ratio, though, did go up. My credit score wasn't too shabby, but I actually am a victim of identity theft. There is help out there. So if you are a victim of identity theft, I recommend you look for help. And income's always important. I have multiple streams of income. I report it. If you can have some sort of income from a day job and a side business, that's great. Just make sure you're recording everything, your books, and you have a really good CPA to help you out with this. Okay, lenders also take into account whether or not you have cash and reserves. This is important too. Cash and reserves can be very helpful. It's always nice to have, I would say, 6 to 12 months of emergency expenses. I know Dave Ramsey likes to talk about $1,000 emergency fund or $2,000 emergency fund, and maybe 3 to 6 months of expenses. I believe at this point you're going to need a bit more, so keep that in mind, particularly anytime you're doing anything when it comes to mortgages. In addition to a credit history and income, a mortgage expert can help you find the right loan option for your situation. In an ideal world, I would say like cash reserves should be closer to about $6,000. That's in an ideal world. So excuse me if I'm saying anything that might be upsetting to you. I know that's a lot of money. It's a lot of money to me. So keep that in mind. That's in an ideal world. I got that from one half of Bigger Pockets, the co-host of Bigger Pockets, when he was talking about investing in real estate. Having about $60,000 in reserves would be a great idea. Let's take a look at this image before we move on. Yes, I thought this was kind of fun. You know, just a little bit of fun little banter. Let's go ahead and go back to the slide and let's read about it. So conventional loans come in two types: conforming and non-conforming. Conforming loans must meet strict guidelines established by Fannie Mae and Freddie Mac. They also have loan limits. By the end of 2009, conventional loans finance 54% of home purchases. So most purchases were conventional loans. Non-conforming loans are for borrowers who do not meet those requirements. They're typically larger and come with higher rates and fees. These loans are often come with insurance requirements. Okay, so ideally there's always going to be a give and a take, a push and a pull. So if you don't meet the requirements and somehow you do get one of these loans, you're going to probably have higher rates and fees. And that's what it's talking about, the non-conforming. The conforming is going to be a little bit less in fees and rates, ideally and probably. You want to keep an eye on it whenever you're doing your negotiations. I'm all tongue twister today. Whenever you're doing your negotiations, you want to make sure you keep an eye on it. So I hope that's been helpful. If you would like more in this series of videos about personal conventional loans, please
Like the video, leave a comment, and subscribe.
seriously, like, we really want to have more discussion with you so that we can continue to make sure that we talk about things that matter to you guys. Again, we have some excellent people here who are really smart on the staff, and they can really guide you, give you some advice and some helpful tips on ways that you could benefit. And that's what we would like. We'd like to see everyone take the information, use it to their benefit, and hopefully thrive. So we'll be back for the next video soon. Thank you for being here, and be well. We will see you next time.